All right, team, welcome back to the Ask Maddie show. It is going to be an amazing show today. One of you guys asked about HBAR, so Maddie is going to provide the charting for that. We're also going to get into some other questions like what changes the price targets in a bull run? What has to happen for us to change our price targets? Also, where are we buying XRP? Some other Bitcoin related questions. We're going to get into it all on today's show. Maddie, I'm very excited for today's show. But before we get into it, Matt, can you break down for the team upcoming events we have next week and Crypto Charged?
Yeah, sure. So we got a couple exciting things coming up next week, as we mentioned on our previous YouTube show here. Next week on Monday, we're going to have Michael Stoyer back on the show, talk Casper with you guys. Again, you guys have a day or so here to drop maybe a couple ideas or questions you guys maybe like to see us discuss there. We do have our next local meetup if you guys are local to SoCal in Orange County on March 29th. Where it's going to be at Hangar 24 Brewery. All the details for that are going to be in the Discord for you guys if you guys are interested in that. And of course, Crypto Charge. What the hell is Crypto Charge? We're an educational platform and really our biggest and grandest goal is to make sure that you guys become as self-sufficient and educated as possible to make decisions on your own. We're not here to tell you what to buy, when to buy it constantly, or manage your portfolio. We're here to give you guys the tools, give you guys the coin library with our general, entry and exit plans, give you guys the resources like the consistent investor strategy to become more educated on a thesis as a whole. Even if you take parts from that and you can, create your own thesis, I think it's got a lot of great information there for those of you guys that maybe don't feel like you have a strategy of your own. Again, the Discord community, our updates Monday through Friday. There's a lot of value, guys. It comes at $49 a month with code YouTube, as well as a 30-day free trial. So I'd love for you guys to get out there with our program. Come meet us out, even if you guys are not Crypto Charge members, at some of these local meetups, if you guys just want to kind of meet some of us. And, we want to make it as community-oriented as possible. I think we've really achieved that goal pretty well in the last 3.5, almost 4 years now.
Absolutely, Maddie. All right, team, I'm ready to get into these questions today. Matt, are you ready?
Let's do it.
Mikey says, can you guys please make an HBAR update?
Sure. Let's go ahead and take a look at the HBAR chart. And I like HBAR a lot. I'm an HBAR holder.
Yeah.
You guys can roll back to a lot of different videos where I talked about DCA on and off different times for HBAR. But I built a nice HBAR bag, and I'm actually still pretty happy with the way the chart looks. There's just a couple things that stick out to me that I maybe would like to see in a little bit differently to say that this is as good of an opportunity from a technical perspective as something like Algorand or Avalanche or a variety of other alts out there. So let's talk about from a macro perspective here, first of all, some of the key support levels that came in. So this was the main floor of support that we had. It was previously a little bit of ceiling of resistance. We can also grab the top of this resistance level. We'll call this a band here. So you had kind of some resistance back here in 2020. You finally bust through there. We don't come and check that. We don't turn that into a support level. We break higher, double top in here essentially. And then we come back and we refill this out as an accumulative phase. So this is the behavior that you want to see, especially when you get a failed initial flip in here. So you get the breakout, no back test. This is the kind of confirmation behavior you want to see on the backside. And again, this is of course over hundreds of days. And a lot of you guys think that, because you didn't buy and it went straight to your targets, that boom, I picked the wrong time, or we're an idiot, we don't understand TA. We're really just trying to capitalize on those opportunities, and you're not going to time the market. It may have been only with 2 bounces. We obviously got a third and a fourth in here, but you're never going to figure out exactly how many, right? And then of course, one of the bigger things that we're going to be looking at here is this area of interest. So we've got this top in here, and then we've got closer down in here, and we'll talk about another level in a second. Now, this is where things get a little bit interesting. I'm going to pull them back right here. This is where things get interesting, because when I look at these areas of interest, we have some pockets of liquidity that got left behind essentially. So when we pushed up back almost all the way to those double tops there. We've had a good size pullback here on HBAR, right? 55, 56%. That's a reasonable size pullback. What I was really hoping for is a test of closer to this local February high, instead of testing just this crazy scam wick from April 22, and then kind of just pushing higher from there. So it definitely has pulled back a bit, but if we were down here at 13, maybe even closer to 11, I would say, yeah, we're in a much more rebalanced spot. This is structurally we want to be. Kind of my same bone to pick with Bitcoin, where you've just got those low 70s hanging out. You're really close to fixing it, but you're not quite there. It just doesn't give me that same confidence. So do I think HBAR is a terrible, terrible buy? No. Do I think that if we were patient here, maybe you could DCA or even set a limit and pick up a good amount more HBAR at a better price? Definitely. The fibs stay the same, guys, especially we're on macro structures here, right? Swing high, swing low in here. And you guys can see that currently we're above the 382, came almost to that 236, and really still have 89 to 220 on the table here as kind of our upside target. So really, guys, remember though, when you see these areas of interest and you know that you really would get a big benefit from waiting for prices that look something like this, sometimes they're worth waiting for. And you may or may not get them all, but if we were to look at current market, you might be able to get another let's call it like 50% discount in HBAR. Obviously, I don't want to see alts get hurt that badly, but we also have seen sometimes disproportional sell-offs, right? Like Solana seeing a bigger dump after kind of staying elevated for so long and kind of coming back to some of those areas that we thought maybe we're not going to get hit because it's been so long since we revisited them. So that's really kind of, I guess, my only bone to pick with HBAR right now is that there's a little bit of, that imbalance left behind. Obviously, very bullish on HBAR as a technology. I know that the NASDAQ just filed recently to have the Grayscale HBAR trust listed on the NASDAQ. So obviously more exposure to the public is excellent. Obviously super long-term bullish on this chart and technology. If we did come down to those zones, I might even be a buyer again and maybe add a little bit to my position there. I'm just not so interested in these prices right now because of the levels that we've accumulated at previously.
Good point there, Matt. Matt, can you actually pull up, because you brought up the Bitcoin chart and about that 70K region, can you make that comparison if people aren't getting what you're talking about on the HBAR chart? Can you show what you're talking about on the Bitcoin chart because of that imbalance?
Absolutely. Of course, Bitcoin has kind of taken off and we're in a leader position. I still think we're making higher highs and higher lows. People will take, a series of bearish impulses and they're like, oh my God, like that's it. The bull market's over. But like, not really, not when you're tracking charts on like macro levels and you understand what should have been done previously. When you look here on Bitcoin, you've got this top in here from this big structure in here, and then you got kind of like the bottom of the balance at like 68.5, right? And we can all, get into an argument granularly over which number is exactly correct. Let's just focus on the zone. What you're seeing here, though, is you have all of these pushes up into this resistance level, right? Some of them a little higher, some a little lower, but you see a lot of sensitivity. You see a lot of areas of interest that are being manipulated by market makers between $68,500 and $73,000. When you get these breakouts, this creates something called an imbalance in the market. When you break out like this and you do not come back to confirm that previous ceiling of resistance is now a floor of support, that creates an area of concern or an area of interest, especially if you're just trying to add to your position because you think we're just going to establish a higher low earlier. We came incredibly close here on Bitcoin. So we came to 78.3. We would have needed maybe another 6-7% to the downside to fill that out. So we're very close to filling it, but not quite there. So if HBAR and Bitcoin and XRP even, right, can come in and do some of these areas of interest or clean them out, I would be like exponentially more bullish and be like, yeah, cool. Let's go ahead and top off our bag a little bit here, or open a position if you're new to the market and this is a good spot to build on top of that higher low. But also remember, guys, sometimes we can have multiple tests of those areas, and that's actually the best case scenario. What you want is that zone fully cleaned out and tested at least twice. That's kind of your best case scenario for success. We want to see the highest probability setups, and those to me are higher probability.
Great point, Matt, because I think with this last, getting people out of the market, this last push down we've seen over this last week, I think people are now of the narrative I've seen online, like that was the final move before higher prices. I've seen people comparing the August 2022 structure to this structure, and it's like, okay, now it's going to be a straight line up from here like it was in that September, October 2022. But it's like, it's already so close, and if we wanted one more shakeout, it's like right there. It's like so right there. And it's like likely to even happen, in my opinion, because it's just right there. It's hanging out right there. And what do you talk about? Healthy structures, making sure that they're not imbalanced. Because if we get in these weird structures and a big news event happens, we're going to see big crashes down. I'm not saying like every news event is going to have a big cost of the Bitcoin chart, but even like with Trump on Sunday, very great Sunday stock market was closed. And then we got to Monday with tariffs and everything that's happening in traditional markets. We saw that big crash. We saw that big pullback. So I know it was just a yap session, but it's just crazy, Matt. We're just like right there, bro.
Yeah, we're super close to filling it out. I wouldn't be surprised if we filled it out. Whatever. Maybe we leave that 7%, 10% pocket unchecked. But if we could do that, that would really just, I feel like, give us the consolidation, because that's the moment where you want to see that higher low established. You break below 68, you start getting involved with the 50s again. Now we're talking about something very different here, and we're talking about something that's not so bullish anymore. But really, we have more room to the downside to actually confirm bullishness, not just become more bullish.
Dude, we're a bunch of nerds. We just yapped about a chart for like 6 minutes.
Don't ask for an HBAR update then. This is your fault.
Matthew says, geez, what would actually change your price targets this bull run?
So I think that I don't really necessarily change my targets. I first of all give you guys kind of a very simple multi-step approach to both entering and exiting the market, and especially on the exit side, having at least a 3-part exit. Some people, want to modify that a bit, and they feel more comfortable with more risk, with less risk, but I think that at least 3 is a good idea. What sometimes obviously I'll do if I see that maybe the risk to reward has gone up really, really high because prices come down so much, but I've also been lowering my average to some extent. Maybe I'll look to take a trim at one of those lower prices, meaning let's take 10 to 20% of the position off the table a little sooner, but I'm still planning on 1, 2, and 3. Again, TP1 is, I think, probably the most achievable out of any of the targets, right? That we have. Not that I don't think that most of them are going to get hit, but I know that TP1 is not a ridiculous amount over the previous high, or the fib doesn't require a 3000x to get there. I think that most of my targets are oriented like that. So really taking a very good chunk at TP1 is more of just about risk management. And that's really what it comes down to is guys think you're going to maybe nail like exactly your plan every time. You might have a couple trades that hit 2 out of 3, and you might have to maybe think about how you manage the rest of that bag if you were wrong about market time, topping or timing or whatever, and you maybe still want to retrace or hold the bag or whatever it is. It's about just reducing that amount of risk, because we're not going to sell the tops and we're not going to buy the bottoms. So it's about managing risk on both sides, being careful about DCA, being very particular about limit orders, and then having that multi-step exit to reduce that risk and mitigate that exposure as you start to get into those periods. So it's not about being right. It's either, if you don't feel confident about 2 and 3 to begin with, then lower your expectations, right? And consider chipping away at earlier prices if that's your big concern of like, I'm not completely out, I'm in big trouble, I shouldn't be playing with this money, right? That's a different conversation. So if we still believe we're in a bull run, which I very much think that we are, I don't know why we would change that, because we've seen big corrections. Yes, we've had a couple of alts that really have been like big disappointers, but more than not still have room, like we talked about, like XBAR, XRP, XRP and HBAR, XBAR. That's going to be the next collab here. Both have those big imbalances that definitely could offer a little bit more downside and actually still confirm a more bullish structure. So they haven't changed for me, I guess, is the bigger thing, because I don't see anything market-wise that's changed that plan.
Sandy says, isn't it kind of unfair to people who missed out on the lower prices on the crypto reserve, I'm guessing coins, and now it's going to be bought by the government?
Life's a bitch and then you die. That's how it goes sometimes. I mean, fairness is never going to be a factor that the government looks at for anything, right? You guys remember, many years ago that gold was not horribly expensive, and the government said that hoarding gold was illegal here in the US, right? So you basically had to sell all of your gold back to the government at ridiculously low prices. And then what happened after that, right? It skyrockets. And yeah, gold's very expensive now. You can still buy gold. You just didn't get the opportunity that other people did, or people who just didn't care about the compliance order of, gold and just continued to hold or move holdings outside of the US just for security, right? Like there was people that saw the opportunity and didn't give into that. So kind of the same thing here with crypto as a whole. Like we've been through a lot of bearish narratives. We've been through a lot of crazy government stuff, a lot of regulatory stuff that's really made this a very difficult trade for people who are not as passionate about this space. But long term, you do have to put that work in. So to some extent, even being that early investor isn't fair, because there's a lot of hurdles and road bumps that you have to endure in order to get that bigger reward. So there's fairness on one side or the other. Either one, you feel very good and comfortable about crypto because the government's holding a whole bunch of it, and you feel good about buying everything they're buying because they've signed off on it as good quality assets, and don't have to do a lot of that hard work to some extent, but you get a lesser reward, right? So it's kind of how it goes, unfortunately.
Yeah, Matt, it's unfair. Cheeseburgers used to be 5 cents. It's unfair. My grandfather bought his house in Huntington Beach for $15,000. Life in all these investments are unfair. Amazon was a lot cheaper. Google was a lot cheaper. Is it unfair that it's more expensive now? Of course not. You got in at the price you were willing to get in at. And just because you can't get in, or just because, these cryptos are more expensive now that the government's not going to buy it, the government's buying the tech because it's valuable. They're taking this stance on blockchain technology as a technology, and the technology is ever progressing, Matt. So They're taking a stand on the tech and saying it's valuable. You should be like, in one sense, you should be like, okay, the price is exuberant, let me look at some areas of interest that I can get in at. Not being
Absolutely.
like, I hate these type of people, Matt, that want to sit here and be like, oh, and this is like the same argument too. They'll be like, oh, I bought XRP, I bought Bitcoin in 2014, but I sold it, and now I don't want to get back in because, I'll never have that early entry like I did. Now it's like the lucrative gains are still on the table. Look at the 2010 to 2020 chart that Charlie Bilello, it's a famous chart by Charlie Bilello of Bitcoin performance over all the other assets. It will be clear as day what the asset to invest in going into the near future is, and long-term future, in my opinion. So it's like, Maddie, I don't like these people that want to like sit and complain, nitpick, oh, it's unfair, it's blah, blah, blah. Crypto strategic reserve on the way. What are you going to do?
Right. You have a choice to make, right? And there is still so much opportunity. Again, I've had that conversation, like you mentioned, so many times with people where they feel like they missed the one pump on Bitcoin or whatever it is, and they're like, that's it. I'll try again some other day, right? Like, and it's just such a crazy lackadaisical approach to something that really could be a great investment vehicle for you. Again, I think the biggest thing, the number one thing, no matter how much you care about crypto or not, invest with money that you feel comfortable using as an investment. When you truly are being honest with yourself about what that number is and stick to that, you're not going to be as emotionally invested, upset about volatility, because you know that the upside's there. You know that you invested in 2 or 3 things that make sense, and you used a budget that makes sense for you. So, I think that's a big problem that people have, where they look at that overall reward and they're so worried about the short-term volatility. Treat it like a 401k, right?
Stop being a bitch. All right, let's go. Life of Shake says, XRP to the moon. What platform should I use to buy?
So pretty much everywhere now, right? You really don't have to go digging around to buy XRP anymore. Probably cheapest fees right now from what I've seen fee structure wise is actually Kraken. Always use the advanced or the pro feature if you guys are using the US based exchanges. Not Binance. I would definitely still stay away from Binance, even though US has been relaunched. Let's see what happens with that. You guys have plenty of options out there that don't involve Binance right now. But I'd probably go with Kraken. Coinbase is also good, but make sure you guys are not using that main portal. So when you guys go to Coinbase or Kraken, you'll see like one of those just like big tabs, and it'll be like swap from this to this and whatever. You can put dollars to assets or swap and convert assets. There's always going to be either a pro or an advanced toggle on those kinds of exchanges. And when you toggle onto them, you get a proper size order book with like the ability to set limits and stuff. You also pay a lesser fee when you use those particular things. So the only time you guys should be using those main portals is if you're setting up a dollar cost average. Outside of that, buying, selling, and limit orders all should be done inside either the advanced or the pro, because you're going to save a lot of money because of the way that they obviously do pricing for their order books versus, just pulling from multiple. So that's really kind of the only advice I would give. Obviously, keep it somewhere safe. I would recommend obviously using cold storage. It's something a lot of you guys think is a joke until something bad happens to you, and you really wish you had that physical layer of security on top of seed phrases and other things. So there's a lot of options out there that are affordable, guys. I especially if you even guys have, let's say, $1,000 in crypto, I think it's foolish to not have some sort of cold storage, whether it's Trezor or Elipal or Ledger, whatever you guys like.
Matt G says, neither Sailor nor the ETFs will sell Bitcoin, making it much more stable. Governments and institutions look to get their feet wet. Equally more stable. Absolute bare bottom, 70K.
You think that Sailor will never, ever, ever have to sell Bitcoin? It's possible that he just takes loans out forever and forever buys Bitcoin and keeps to borrowing against that Bitcoin and just hopes that he's always right about the strategic behavior behind that. Nor the ETFs will sell. So ETFs are electronically traded funds, so they're not necessarily like buying massive amounts of Bitcoin per se. But remember, there's spot ETFs, so they track the price of Bitcoin one for one, right? So it's not really so much of like, even when you're on exchange, like, the exchanges are not necessarily gobbling up your Bitcoin. It's just fair market value, and then there's obviously assets on exchange and warm wallets to be able to swap. So I don't think that either of these things would be important factors to consider of like Bitcoin stability long term. Government institutions looking to get their feet wet, equaling more stability. Of course, when you have more institutional and government involvement, can, like we talked about in previous episodes, take away some of the immediate supply that's available to sell on market. It also, again, creates room for more manipulation, because if you control more of the supply, you can even spook the markets with fake orders in the order book, and then you pull them at the last second. There's a lot of ability when you do hold bigger amounts of assets like that to manipulate the market, as much as we want to feel good about the safety and like the supply shock factor for retail consumers. So do I think that 70K is actually a very like good bare bottom, or like our next local low here? Yeah, I think that's probably a pretty good spot to consider. As far as if we get to 220, 240K, and we look at some of the other areas of interest on the Bitcoin chart.
He's talking about absolute bare bottom, like bear market low, dude, because he's talking long term about with these things.
I think that we could maybe come lower than that on Bitcoin and definitely see some other prices in the bear market. So I'm talking about this next leg up specifically, right? Like I think that 70K would be a good spot to look at. But if we're looking at some of the areas that maybe still could have gotten like a little bit more satiated, just like we saw in this last cycle. I know obviously we had Catalyst, but you came down to 15.6, and everyone's like 20K bare bottom, right? Like we can't come below that. Like, not necessarily. Like, this is an area of interest we would like to see a bounce, but it doesn't mean that there aren't other pockets that still show a little bit of weakness, or like areas that probably should have been checked out a little bit earlier on. So I think that yes, over long periods of time, you will have a little bit less volatility in the market as market cap grows. You will still have a lot of volatility, but it'll subside a bit. You definitely institutions and availability and liquidity coming from those places is always super beneficial. But remember, guys, there's a lot of money in crypto right now already, and we still get these big vacillations in markets, right? Even when you have all of these funds that have billions of dollars in crypto, right? So remember that yes, more money equals more liquidity, but it also creates more opportunity for manipulation. So don't assume that everything is just a smooth ride up once institutions are here.
Great points there, Maddie. Yeah, everyone wants to use this new bear market. They want to like raise up the bear market and, right under where we're currently at right now, just like $20,000 off of where we're currently at, or $15,000, so that they could buy right now and have an excuse to buy right now and not actually be tactical with their investing. And I find that to be silly because yes, Bitcoin, the other cryptos are going to mature over time, but that maturity takes a long time. Okay, you need to see multiple cycles, and for you to just like there's a lot on this show, Maddie, today that's just like really pissing me off with these people that just want to cop out, that don't want to stick to the plan, that want to complain because they missed out. They're not ready to take accountability on what they need to do to set themselves up for generational wealth or to set themselves up for a better life. And I really, I hate those questions. I hate those comments from you guys today, honestly, because you guys need to take control over your investing. This is what we do at Crypto Charge. You become a self-directed investor. You get the guidance from the team. You have a smart community, and you're able to take over your money, not have to go to someone manage your money and pay their 2% fee. Okay, so that's what it is at Crypto Charge. Matt, I reject all of these. These are honestly really annoying to me. I think you were very nice with it, but plainly, Matt, these are stupid questions and comments, honestly.
I mean, the HBAR update was fine. But yeah, I think a lot of it needs to become like a mindset shift for you guys and just better looking at the markets through as more of an objective lens if possible. Because when we try to make timelines for ourselves too, based on like, oh, I'd like to be in a new house by the end of next year, or I want to be in this new car by this time, right? You're going to invest different amounts. You're going to tell you're going to like jump at any analytics out there that suggest that we're going to reverse at current market or any immediate like price to give yourself that confidence. And again, maybe continue to invest based off of that kind of cycle. And like, as you guys know, right, like the algorithm will always feed you guys the kind of stuff that you continue to consume. So if you only consume when does the bull market start, when does the bull market resume, when do we get here, by what date, you're going to get a lot more of that content in your feed, and it's going to make it more difficult for you guys to have a clean read on the market because you have all of these analytics talking about timelines and price predictions and moon cycles and whatever the hell else people are using to tell you what day and time we're going to reach, a $500,000 Bitcoin, right? Astrology, yeah, exactly, like Capri Sun rising, asparagus setting, whatever. Just try to like clean your feeds out, guys, right? Like I'm not saying don't just watch white content, but like watch analysts that have their head on straight, Rex Capital, Blockchain Backer, Kevin Cage, right? Like go check out people that have their analytics dialed in and are not trying to hype up all these kinds of crazy timelines for you guys. Like even people I don't always agree with, just stick with the guys that look at the bigger charts and stay for the macro picture. You're just going to learn more and you're going to have a much better plan that doesn't depend on your day-to-day mood or economic environment or whatever Donald Trump says, right? Like you can't let those things affect you.
Right. Great points there, Matt. All right, team, we're out of time. Thank you for joining us today. If you got something valuable here, make sure you leave a like. We got Stoyer on Monday, 7 p.m. on Monday. So if you have questions for him, this is the CTO of Casper. I see your guys' questions. You guys love to talk shit. Bring them in the comment section down below. They're going to be filtered by us. So we're not going to bring you guys like, we're not doing, the Ask Michael Stoyer show where you guys get to shit on Michael. Like we're not doing that. So
absolutely not.
Be respectful. Be respectful. Drop that in the comment section down below. If they're good, we'll bring it up. But until next time, team, bye.